Jamie Dimon said something like, I would fire, if I found out that any of my staff, even personally uses crypto, I will fire them, because it shows that they're stupid. It's not about underlying value. It's about utility. It's about trust. Trust is the number one thing. Reality is fiat currency lacks intrinsic value.
Exactly.
Hello, everyone. I am Olu Omoyele, founder and CEO of DeFi Planet, and I'm joined today by
Samuel Adile, head of product and content at DeFi Planet. It's 2026, and 2025 was what a year.
it was a very big year.
Yeah, it was very big. Lots of stuff happened.
Yeah,
Easy year.
a lot of changes.
Yeah.
And I think really, if you think about the changes, I think the changes in the US in terms of Donald Trump coming into office, that just changed the entire trajectory.
It's things were kind of on a slide, and Trump came in, and everybody already had touted it all along his campaign, like campaign rallies and stuff, talking about crypto. Like crypto was one of his talking points. And he was able to sort of just get everybody behind him. Kind of, it wasn't surprising really, but lots of changes compared to the last, say, 3.5, 4 years. So things kind of slowed down on the enforcement side. Gensler getting out.
Gensler to the SEC.
And then maybe the enforcement part was taken care of. I guess it was just money making and building time.
Indeed.
So I think the aside from the drama with FTX and C's, so that kind of just got wrapped up. Then everybody kind of just moved back to growth, and it's been a decent ride since. Lots of actual development. I think the hype bits around blockchain and crypto products has now died. It has died out. So everybody's focused on utility now. How useful is this stuff? How many people can use it? Where is it applicable? And that's what sells now.
Although memes are still memes
are an industry.
Donald Trump himself issued a few meme coins. Melania coin, Trump coin.
And that was very controversial. And a lot of people were talking about. But so the thing, I think meme coins are an industry on their own, sector on their own. Like people have now learned to sort of give them their respect. Same way you give their one chains, same way you give. They're just their own sector, they're like gaming tokens. Same way, so they serve their own purpose, so to speak. And some of them have actual utility. People use SHIB to book hotels in Europe and stuff like so. Everything has its use.
It's on use. To be quite honest, I don't mind them. I don't necessarily mind. I don't have an objection to meme coins. I know there are some within the sector who have an aversion to it. I don't have an aversion to it because I see crypto. Because people say, "Oh, crypto is not what crypto is supposed to be about. It's supposed to be about economic freedom, blah blah." But I think crypto for me is not one thing. Crypto is a technology, and once you see it from that point of view, technology can be used for anything, right? So a mobile phone can be used for so many different things. You can shoot a podcast with it. You can do a movie with it. You can make a phone call with it. You can browse the internet. So I think I just say it as something that enables you to do stuff. So what that stuff is, it really depends on you. And you'll only be able to do stuff for a long period of time if it's stuff that people want. If there's no market for it, if people don't want it, it will not happen.
Yeah, no matter how good it is.
So meme coins, I think they kind of tap into something that I guess older people might kind of scoff at, but actually younger generations is something very real to them, which is celebrity culture. That's real. That's something people monetize on social media now. People have jobs now. Their job is to be a celebrity, influencers, streamers. So this is a big deal. I think meme coins kind of fit into that. But obviously, when you get a kind of a fraudulent meme coin, the rug and pull, then we don't necessarily want that. But that's the same with any aspect of society. You want the good players to be in the system, and you want some rules and regulations to be in place that can weed out the bad players. So I think meme coins are fine, but rug pulls are not.
Even before meme coins came about, I remember lot of, including Trump. Buffett, Trump, Demon at Diamond at JP Morgan.
JP Morgan.
I mean, all of them hated crypto. And you know, if you asked them, I mean, most of the reasons they were citing at that time were very vague, very, you know, just the whole thing is just.
They always say things like crypto has no intrinsic value.
Yeah, no intrinsic
value. And it's a concept that I've always, I don't really understand it. Like you hear it a lot from those like bankers, senior bankers, but also from central bankers as well, where they say it has no intrinsic value. I remember the former governor of the Central Bank of Nigeria, Emefiele, said this when he was issuing the CBDC, yes, and then he effectively tried to ban Bitcoin at that time, and he said it's because it has no intrinsic value. There's nothing backing it. And I'm always it's always shocking to me that any central banker anywhere in the world can say this, and even the central bankers in Europe, Bank of England, ECB, they've all said this, that it lacks intrinsic value. The reality is fiat currency lacks intrinsic value.
Exactly.
I mean, it's just we specifically cut intrinsic value out of it. It used to have intrinsic value. It used to be linked to gold. But the US government decided to delink fiat from currency. That's why it's called fiat. It means by government fiat. Yeah. Like it has monetary value in society. It's accepted as a means of payment just because we said so.
Government backs it.
Just issue a fiat. Like it's just an order. It's by fiat. Yeah. So there's no intrinsic value. It's not that if you add up together all of the US dollars in supply, you can find the assets that will back this. So currency, means of exchange, you know, the way we have designed them today in the world, it's not about underlying value. It's about utility. It's about trust. Trust is the number one thing. So if you are selling something and I want to buy it, well, the currency that I'm giving you depends on whether you trust it, whether you trust your ability to use that currency that I'm giving you in future for your transaction, right? And that's all that you care about. And if you think about it from that point of view, it doesn't even have to be. It doesn't have to be generally something that is generally spent. If I have something and you want it and you think you can give it to somebody else to receive value, if I have a piece of painting, you can take that from me as payment. Yeah. If you provide a service, I give you a piece of painting. If you are sure that this painting has a market, you can sell it. So, intrinsic value is a.
I mean, is a very they kind of played around with it without trying to like really look into the technology behind. I mean, obviously, what they were focused on was like what's the noise, like most of who are the people using it. Yeah. And importantly, they didn't have control. So one thing about, as you said, fiat is backed by the government, controlled, 100% control. So the problem with crypto was somebody in the basement issue token, and write a white paper, and have some liquidity start to come in before you know it 22k, before you know 300k.
But it can be very fast. You can do it very, very quickly.
Very quickly, without getting any licenses or anything. So that kind of created a problem initially for the traditional guys, and it took some time. But you know what I found funny was when JP Morgan started to build their own internal. I found it very funny, and it was because it was very quiet, it was very low key, and suddenly started to hear you need to use blockchain systems for settlement. So I think people like Emefiele and Jamie Dimon walk what they said back, because I'm very sure that at some point, probably privately, they have used. They have probably used.
I mean, they've done a massive U-turn, right?
Yeah.
Jamie Dimon said something like, "I would fire if I found out that any of my staff, even personally, uses crypto. I will fire them because it shows that they're stupid." Yes. That was what he said. I know JP is like one of the biggest, crypto kind of investors out there. They build their own, like you said, their own platform. They have a blockchain. They even have a coin that they use just within their ecosystem. JPM coin. And they use that to move value a lot. You don't have to go through like correspondent banks and because moving money in the world is a very complex thing. People don't understand what it takes normally to move fiat, especially when you do so across borders. I mean, it can go through up to 6 financial institutions. So the ability to move value seamlessly on one single ledger. I mean, this is
And everything
game-changing.
is automated, publicly, like public stamps.
So the view that I see is the view that you see as well.
Immutable.
Reconciliation,
So,
we don't need any of that.
Yeah, you don't need any of
You
that.
know, people in this world whose jobs are just
Purely,
reconciliation.
auditors. I mean, that's what that's what
every single day, bankers have all these people in the middle office and back office who are reconciling transactions every day.
That's why banks close by 4 or something.
So they can spend the rest of the time just reconciling.
Yeah.
So it's been an interesting time. So I think Trump has had a big positive effect, I suppose, in terms of crypto. I know it's having a whole lot of effect in other areas of life, positive or not. But in terms of blockchain, just removing that air of criminality. So I think Trump has moved things in a different direction. It's a different direction from his predecessor. Biden was very anti, and so it's been good to kind of see that, and all these spurious cases that the SEC was doing, SEC chasing everybody around for no good reason, really. To be quite,
as a point about 40, 50, 60% of enforcement actions against they were happening in the US. And fast forward to today, that's not the case, and you're seemingly wondering, has all the bad stuff stopped happening? So it raises some questions around whether some of the enforcement actions under Joe Biden, if they were necessary.
A lot of them were not. I mean, I would say that I would say that most of them were a lot of nonsense, because you basically don't have a framework in place. You don't have a rule book. You don't have law. You don't have statutes. But you're going around trying to enforce. I mean, if you think about, I mean, CZ went to jail, and Binance paid like $4 billion for the type of offense that HSBC would have paid $100 million fine for, JP Morgan $100 million fine, and they would have moved on. Nobody would be even, there would be no arrest. And he's paid several billions. The company has paid several billions. He's paid a personal fine as well. But he's also paid a heavy price personally, going to jail for 4 months and losing his job as the CEO for something that, had there been rules, would have received far less punishment. But there are no rules, so even your ability to say that offenses have been committed is quite
it's ridiculous.
So I'm just glad that we're kind of over that.
Over it. I mean, the Tigran Gambarian issue in Nigeria too. It was very similar to what CZ had to do.
Yeah. That was a crazy moment as well, where 2 Binance executives are arrested in Nigeria, and without charges, languishing in jail for months and months and months.
A lot of people would have forgotten the backstory, and I mean, for people who could get into the real story, it was more ridiculous than what was getting reported, because he got back to America and he started to kind of spill out everything, and talk about how government entities playing games and stuff, and it was from there, it was easy to now assume that some of these so-called enforcement actions they were not based on strong legal foundation, because in Nigeria too, no clear rules anyway. It wasn't like the CBN had come out to say, okay, this is how we're gonna deal with it, this is how, and it was because Binance was is a centralized exchange, and as far as most users, lots of Binance users, at least there was fintechs in Nigeria basically were having the same level of KYC Binance had at that time. So you see fintechs in Nigeria, basically the same information you're going to give registered and accredited fintech company in Nigeria, it was the same KYC information you're going to submit on Binance. So it was really strange to sort of just all of this is happening, and you guys know about it, you report it, this, that, and you kind of go on. But
I mean, the Binance thing, I think I would hazard a guess that Nigeria were, I think certain people in important posts were just trying to shift attention away from problems that are local. trying to make you look like a foreigner, an outsider, something was important. So we also went through in Nigeria. There was a period of volatility where the exchange rate, dollar to naira, sort of changed in a very big way over a short period of time, and inflation very high. So price, price was not stable, and I suspect some people were trying to shift the focus of blame for that, because there was a suggestion that Binance was somehow responsible for the crash of the naira. No, Binance was not responsible for the crash of the naira.
How much?
I don't think any reasonable person
what percentage
can think that just because people can trade P2P on naira had a problem, and that's led some people to try and seek to more stable currencies to put their assets in. So people are storing their assets in USD. And many people store it in USD fiat as well, and some other people do it in USD, maybe USDT, USDC, etc. I think providing a platform that allows people to exchange currency, it doesn't mean that you are somehow crashing the currency of a country. People are doing what they want to do, and these are peer-to-peer trading. So I think Binance got the
short end of it.
But I actually also have another angle to that, which is I think Nigeria actually is a type of country that should have and should embrace crypto, like in a very strong manner, and I think the opposite of what we did with Binance and the impact of that on other firms that might have wanted to come in and have become scared because of that. The opposite of that is what we should have done. We should have opened the doors, bring them all in, and find a way to use that to kind of create wealth and create jobs. So there are many graduates here who need jobs, tech savvy people who are very interested in this space. So I think I don't think it's too late. I think we've kind of moved on now from that Binance era. The CBN has moved on as well from the previous ban, no longer a ban. The legislators have passed a law now putting crypto under the SEC, and the SEC already have a sort of a rule book actually, which incidentally they had published a couple of years back, and it was the CBN sort of shadow bank on crypto via banks that stalled that. SEC had actually issued rules which they then could not implement. So there seemed to have been lack of collaboration or cohesion a couple of years back between the CBN and the SEC. But hopefully that's all changing now. Legislation has put crypto firmly under the SEC. I don't know, there might even be new legislation coming up in the future. We see it in the press. We talk about the possibility of a Nigerian fintech regulatory commission. If they create that, all those fintechs, the CUDA and the money points of this world, as well as crypto, will fall under that. So that might help to kind of streamline things.
Give it some form, and some permanence.
But I think moving on from the Nigeria space, a lot has been going on around the world.
China.
Yeah, China. What's happening in China?
Yeah, so
it's still banned in China, no?
They're still banned, but we both know, everything is not what it seems with China. China is.
I don't know.
China is right.
I don't know.
China is. So one thing China is definitely not doing. They're not going to be playing second, third fiddle to the States when it comes to people. Let's believe that. So
Hong Kong. I suppose there's some experimentation.
So Hong Kong is sort of Hong Kong is the testing ground. That's where the bombs are detonated. Right? That's the testing.
We're not talking about any kind of war bombs. Business bombs. So Hong Kong is definitely something going on with the monetary authority, Hong Kong Monetary Authority, HKMA. I think it's quite a responsive body. I think they're trying to experiment now.
Yeah.
But I think Singapore is probably the leader in that region in terms of fintech and digital assets.
Yes. Singapore is very digital assets friendly from the start, because they have some organization in terms of vision.
Yeah.
So Singapore has been essentially, so thinking about this race between, everything that is happening, I can almost trace every geopolitical event, wars, trade deals, tariffs. You can almost boil everything down to the race between the West and the West, Europe, America, sort of
China. So it's sort of this battle for who's going to be the leading superpower for the next 50 years. And crypto just so happens to be in the conversation. So a lot of stuff is, you're talking about electric vehicles, you're talking about green energy, clean energy, moving away from fossil fuels, moving away from, just more modern military equipment, drones, everything, like almost everything I think of, it has sort of become this race between. So,
actually, I think you can see an interaction with cryptocurrency. Actually, some of those things you're talking about. So, energy, as an example. Energy is one of those things that can become more easily tradable in future, where people can trade things in smaller amounts. And I think because crypto makes micro payments easier to do, because payments generally are expensive to move. Money is expensive to move, but if crypto can make it cheap, and I'm not saying any crypto can. We all know Ether, at the wrong time of the day, you try to sell anything on the Ethereum blockchain, then your Ether cost could be a lot. But in general, though, you could have much cheaper. There are cryptocurrencies that are very, very cheap to send, and they're very fast. So, micro payments for those kind of things, where people can share, they can share energy, they can share cars as well. We might be facing a future where individuals don't feel the need to own their own vehicle. They can have access to any vehicle they want at any time, especially where vehicles may no longer need humans to kind of drive them. So that might be a thing in the future where you just make lots of micro payments for lots of different things.
It's not like the idea of fractional loan and ownership. It's no longer
Exactly.
Organization is
a lot of assets now are getting tokenized. Real estate, especially, it's becoming a thing. And you see, the thing, like the some of the advantages, crypto, I know this is common knowledge, but it offers transparency. In a way, most traditional systems are not. I think,
as much as it's one of the biggest advantages of it, it's also one of the reasons why some settings it's not readily accepted, because it gives too much transparency. Like, there's too much transparency, and that could be a problem in some situations.
And that's why you have some of those privacy coins. Monero.
Privacy coins are under fire now.
They're fire. You have those blockchains that allow you to mix.
Mixers,
etc. Which have also come under attack, right?
Yeah, not permitted in certain
places.
And Storm, founder of is dealing with some. Dealing with some legal cases.
Again, I don't know the full details of that case, but it just is on the surface. It seemed like such an egregious use of power to criminalize that sort of activity. It's a software developer that has built a platform. If some people use the platform for criminal purposes, how can the responsibility lie on the builder?
Founder.
So let's try and use like normal things. If somebody goes on the internet and carries out a criminal activity, say like fraud, as in we will want the law enforcement to trace the user that is perpetrating this fraud in real life. But you don't want to go to the coder of that site or the internet service provider, or if somebody does an activity on YouTube or FB, you don't want Zuckerberg arrested because Facebook was the tool that somebody used to communicate with some criminal. Like,
it's ridiculous.
It's a ridiculous thing.
It happened with Pavel Durov, Telegram. Happened with CZ, Binance. Happened with Tornado Cash. So it's kind of, again, like you can see the pattern, like there are patterns.
But we hope that we're kind of coming to the end of that, which on type,
Definitely. One of the, as rightly said, one of the biggest pointers is the fact that there's now actual support, political support, like political will to make this thing work. And from like a country like Europe had to follow.
We also have laws now. So
you have
so
laws.
European Union has a massive piece of law now. Mika. Yeah.
And so Mika kind of, Mika was sort of the first big time, large scale, people, like it was Genius, the Genius Act came after Mika.
Yeah,
So kind of Mika had showed, Mika was just proof that, okay, this thing is real business.
Yeah.
We have to regulate it. And this regulation can be deployed across, it can now be customized and deployed, replicated across. If you want to regulate the space, this is sort of the framework.
Yeah.
So
But we should give a lot of credit as well to say the UAE, who actually who actually put their own regime in place before the Europeans. So UAE, I know it's a relatively small place. In terms of relative to, Mika gets a lot of news because there are 27 states in it. So, but the UAE has been pretty good as well in terms of putting frameworks in place, and even Japan was one of the earliest movers as well in terms of putting crypto frameworks in place. But I think UAE is definitely worth paying some kudos to them.
Yeah, I think generally the Middle East is changing,
especially some countries like the UAE, Saudi Arabia. Generally, culturally, you can see. Everybody used to believe very close economies, close countries, but we do believe Cardi B go to the boxing.
And Cristiano Ronaldo, look at how he opened up the entire football space in that.
They're having exhibition like A-list boxing. So
Saudi is basically the place to go and fight.
It's the new destination. Sort of the new place. New Greece.
And I think it's good. I like the old Saudi. How Saudi is embracing sports and becoming a center for sports. I'm in favor of it. I know there are people who don't necessarily like it, but I like plurality. You never hear me support a single superpower in this world. I want 10 of them.
Everybody
there needs to be balance because human beings, I think, have shown themselves that they are capable of being trusted with too much power. Absolute power corrupts. I think I'm quite happy with the role that Saudi's playing. It wasn't one that I would have predicted that they would go big on sports. But I think they're planning to go big on sort of biotech and tech as well, AI. They're planning to go big on it, and that would be an interesting thing. Because again, I don't want an AI world that is controlled by one country that can then decide who else can have access to it. I don't think we're living in that
it's going to be problematic because you're dealing with tons and tons of information. Dealing with and information is in today's age is the most valuable thing.
Indeed,
It is the most valuable.
It's a no oil.
It's a no oil. The more information you have about people, who's at stake.
Data science, I think, one of the. I like to always think of data science as being part of a triumvirate. I wrote a piece about it actually. The triumvirate of sort of data science, AI, and blockchain. I think those three are those three are independently moving areas that are very similar. But actually, they are gonna work together. So it's very strong interaction between data science and AI. But I think blockchain is fusing with them to be the three things that together I think will shape a lot of what we do in the world over the next 20 years.
Speaking of AI, it's getting a foot on the people. So I'll say AI. Look, there's this argument whether it's new or it's been around for quite a time. There's the argument technology will resume it. But I don't think the argument matters. What really matters is what are the applications in place. And generally you can see how fast. Like it was one of the viral, probably more viral, like how fast it is.
But the kind of Gen AI. I think generative AI. That was also the same with so much speed and and it's been evolving very fast. Growth. I don't think I've ever seen evolution of growth in any technological area that quickly, because there are so many firms competing. Because OpenAI basically threatened to unseat a lot of incumbents like Google and others. Everybody has kind of responded. and then in China, I mean,
DeepSeek.
I mean, what a
The-
great intervention to
Yeah,
have in
yeah,
that space, and at the kind of price that
That
kind of
is-
cost. Because until then, Nvidia and others have been convincing us that it costs hundreds of billions to do,
yeah.
and that's why we should give them lots of value in the stock market. When we talk about intrinsic
Yeah,
value,
intrinsic value.
I mean,
And then the Chinese came and did what they always do.
do it better for
Do it better
a
for
fraction of the
less.
cost. So,
Unless
yeah, it's an interesting.
and you can't say they made this in
Interesting
sweatshops.
Yeah, exactly.
You can't say they
Exactly.
made this in
Exactly.
sweatshops.
Exactly.
So yeah, I mean, balance is important. Like cultures, ideologies always differ. People always have like what they but and it will affect blockchain. No matter how much you try to separate the technology from
Yeah.
human beings,
Yeah.
humans are going to be the ones. So they're always going to want to affect the direction of these technologies. Like you just must always make sure not to lose sight of this is gift of this technology. This is what it can do.
Yeah.
I mean, like thinking about it from a voting, like governance perspective, one of the oldest applications of crypto has been governance. I mean, DAOs are have been around long, and
I feel like they haven't achieved
yeah,
their,
it has. I mean, it's
their
one of,
potential.
yeah, it's one of the most
DAOs are like, very,
underutilized.
like huge
One of
potential.
the most underutilized.
Honestly.
I remember there was a when BTC Bitcoin Classic.
Mm.
So and Fox. So that was an example. Like that was a very popular time. Fox was happening, and in most cases, users vote. And I saw, like that was my first, introduction to the reality that you can have about 6 million people vote transparently on
Yeah.
a decision in less than 24 hours.
Yeah.
It was ridiculous. Like it was ridiculous. I didn't think it was possible. I've generally not trusted conventional elections, like especially large scale.
I think many people around the world would agree with that.
I have a very difficult time. So I'm just like I can say, oh, so this is the thing I'm thinking about it from error margin perspective. So I know rational vote at the end of the day, majority can sort of cover for the margins. The blockchain powered votes, like basically there is no error.
Yeah.
This like the eyes of the it's like
Yeah.
no.
I mean, it's game changing if we apply it because of the ease of doing it. Once something becomes very easy to do, then the frequency with which you do it and the things for which you do it
Yeah.
will also change.
Yeah.
So let's take email as a very good example. Email has always been free, but if some of the technological incumbents of the age like IBM and AT&T, if they had been successful in buying the internet as they wanted to do at that time, and email would have been charged the way text messages are charged, like each one. If that had happened relative to what we have now, think about how emails can be used for OTPs and what like codes that get sent to you. Stuff like
Verification.
that simply would not have happened. If text mess- if,
Yes.
if emails were being charged for the volume of emails that we have now and the
Will be less.
use cases that we use them for
way
will be way less. So I see the DAO thing in a similar way in the sense that if we can perfect the way of doing this voting in a transparent manner with speed and even the things it wouldn't just be used for the things that we vote for now. There will be things we don't vote for currently. We will start to vote for because it's easy to vote for.
Yeah, exactly.
Because if you like more and more people will want a some kind of democratic say in how things are run. Whether how a decision is made by a government ministry, a department, a business, a company, a department, a social group, a social club, like whenever you have large groups of people, we've tended to create a smaller group within them and give them the power, delegate the power to make decisions, because it's inconvenient to get everybody to be involved in decision making. But actually, if it becomes very easy and you have an app on your
It
phone
does.
and you can just
It
vote,
does.
then more and more people will get involved. Give an example. I'm a governor on the Algorand blockchain, and on my app, you kind of stake some of your algo, and then you can vote, and it's very easy to vote, and you can see everybody's vote. The results come out.
Yeah.
Like it's I mean,
And decisions are made, in fact, and they are made from, one of the politically in the US, there's a lot of controversy around mail-in voting.
Okay, yeah.
So
I mean, in this age, people shouldn't have to be posting their vote through a poll. They have to vote before the voting day, so that they can get them.
Yeah.
I mean, in this day and age, even without blockchain, you have to do this.
Sometimes, like in my mind, I'm
like live electronic voting. We should have to vote from their phone
and trust that it's going to count, and the system is not going to be rigged. Like, it is transparent, not to be rigged. I mean,
but you really shouldn't need human beings to count votes.
Exactly. I mean, ideally, the
computers should count the vote instantly and tell everyone.
That's a trustless system. I mean, the idea is to build a trustless system so that you handle these things.
But I guess the question to ask yourself is, who has the incentive for free and fair votes, free and fair elections? Because you have to have the incentive for that to want that type of trustless system. If you want some nefarious or unethical access to rigging votes or influencing the results, then I suppose you wouldn't want that. But I think the majority of people though would want a more a more open and transparent.
Any democratic society, I mean, as long as it's not a monarchy, as long as they want.
Well, some monarchies also put some semblance of democracy. Take the UK as an example. The United Kingdom is basically a monarchy, but they also let you vote for a few things.
Most of Europe really
smoke and mirrors, I guess.
But again, transparency, very. It will be a very big selling point. I think if it finally takes hold, it will be another very massive utility for. And still talking about predicting outcomes. NFTs were very noisy, but prediction market, like
really
prediction markets,
prediction markets are really
holy
good.
markets.
Yeah.
The US election, I mean, almost every US election, you want to know the candidate that will go to New York's mayoral race to a T.
Okay.
Why? Because users can actually sort of vote before the actual. So if you're gonna stake, you can literally see where the sentiment is through like users that have posted votes.
Yeah.
And you can't skew the votes because like it's kind of so it counts like single user a particular vote.
And I suppose you put your money into it.
Yeah, you put your money
so
into it.
It's not a frivolous.
No, it's not.
vote.
It's not. And you can't just like warp or skew the numbers. You can't do that. So almost like you can almost say there's a certainty to poly markets polls.
I mean, it's really growing, isn't it? It's really growing
And
now.
it's like a lot of you.
Prediction markets.
And what again, this is why talk about utility, where people will just naturally calculate what works.
Yeah.
Definitely sure there have been markets like that, and poly market and cows. I mean, the kind of growth exponential.
Yeah.
Exponential is an industry. So I mean, there's just a lot of like you said, it's applicable to almost good technologies are there. Like they have almost
and you can't really predict where people will take it, where the interests are. I mean, going back a little bit to DAOs, because I really like the idea of DAO. I feel like he hasn't quite achieved its objective. But if you think about it, it's like a natural extension of social media, right? So social media did something very big in the world. It allowed the world to become tribal in nature, where people can find their tribe in the world. When I say tribe, people who have the same interest as you, and irrespective of country, continent, nation, language, whatever, you can find the people that like the things you do. Yeah. So whether you like to make art or like to draw, you like to sing poetry, whatever. any kind of interest group, or you follow some celebrity or whatever, you can find all of those people in the world, and all the barriers are down. The fact that you're not in the same country, same continent, don't speak the same language, in different age brackets, different income brackets, none of that matters. Social media has allowed that, because you can go on any social media platform and there will be an interest group, special interest group for this, for that, for that. And I think that's been a very powerful thing. If you remember, within the kind of US stock market trading kind of world, many groups are set up in that way, and they've been able to effect real impact in the world. Buying with their buying power for like shares. So from that point of view, crypto and DAOs, I think, give a huge opportunity for common interest groups to coalesce together and cooperate on something. And like, you could easily get 50 million people that like a certain issue to put their money, their crypto into it, and make change happen. They could buy a business. If they have a charitable undertaking they want to do, like, that would be perfect for that. So I think it's even beyond just helping us do existing voting better, faster, but actually coordinating and organizing human behavior, human activity together to achieve a goal along interest groups. I think it's a huge space for like DAOs and
yes. I mean, generally, still speaking about this particular topic, an average Joe, if you get,
on average a day
or an average a day, you mentioned BlackRock. Thinking and you say, oh,
or hedge funds generally. I mean, the hedge funds in just like Nigeria, you have big names around.
The immediate thinking is not, oh, can I actually walk into BlackRock office, here's holdings, or I just say, or City Trust, and say, I've got 100K. I want to, like that kind of situation, that kind of arrangement.
So there are certain markets that are not open to people in a certain bracket of
yes. And whether we like it or not, the majority of people fall, just 1 or 2, 3% of populations in every country walk into a BlackRock office and say, got investments.
So does that bring us to tokenization?
Yeah,
the fact
tokenization.
That you can break things down.
So that like the idea of DAOs and tokenization are very, very. So tokenization, if done properly, is going to sort of culminate in decentralized organizations managing those tokenized assets. Eventually, tokenization and DAOs are going to sort of converge. And the idea, any technology that's going to
like how I'm trying to say
so this is, let's use a very practical. There are some states. Say, let me give an example. In the US, owning a home is steep crime. So we are talking of the average NI in the US is $40,000 per annum. And let me assume this average person lives in San Francisco, where upper.
So I think it's fair to say San Francisco is not where the average.
But whether we like it,
we have property prices in San Francisco is very different from.
Yeah, but we have Starbucks, people working in San Francisco, and funny, San Francisco has, as fancy as it sounds, they have a homelessness problem.
Okay.
And in the West, it's sort of a very, it's a very per hour system where like time is money and you get paid. You're getting paid in most cases based on the amount of hours you're putting in. And they inevitably, the level of inflation has gone risen to big issues after post-pandemic economy. It has become important for average people to be able to have passive income. How do they generate passive income? You have to be assets. Assets that appreciate. Assets that appreciate. And this. So when I was young, I remember my mom was talking about cooperative societies. Like these things were existent before banks. In lots of informal economies, and they were run. And these people come together, own a farm. right?
Yeah.
One person, two people can't own, four people can't, but you have like a group of 30 people, and that becomes an enterprise. So now thinking of it in the modern sense, tokenization helps everybody get a piece of a very nice home in San
asset.
Francisco that a banker, a Wall Street guy can afford. And the Wall Street guy has to say he wants to lease or rent it. He now has to pay rent to 50 people working at Starbucks. That
Yeah.
helps.
Yeah.
And then the guys at Starbucks, right? So one person doesn't get.
They now own a part of an asset and they can generate income.
Yeah,
income from
and
that,
how do everybody has to have a say, right? Okay, say we want to do some construction.
You just vote via your
you
DAO
vote
type
via
thing.
your DAO.
Yeah, definitely good.
So these are like real applications of this technology that can help a lot of people.
Yeah.
Like help them, just improve like standards of living.
Yeah.
and
There's
help
no
people
limit to the kind
survive.
of assets you can buy. Actually, you can buy any kind of assets.
Yeah, in fact, it could be a pool of cars for tax. I mean,
Yeah.
anything as well. You can make the decision. You see what type of asset do I want? Is it something that is going to be fast? Is it something that's going to be long term, short term? You just give people more flexibility,
More options,
more options.
Yeah.
I
And
mean,
it's an easier entry point, right?
Yeah.
Because they wouldn't have been able to afford the thing on an individual
Yeah,
level.
exactly. And I feel like
Yeah.
developed economies have always been the ones to take, like they have always been the ones that take the lead when it comes to solutions like this. I mean, before the ideas of mortgages came in, they've been well entrenched and practiced in any Western. So if the idea of credit cards, mortgages, take kind of established hold,
Yeah.
they've taken it. I mean, there's absolutely, it needs will, it needs political will to push. So, the battle really is, what reigns now is mostly a battle of ideology, and it's very cultural. It's not people centric. It's just it's very academic, and then it feels very abstract, very theoretical, and everybody's just arguing on paper. Nobody's really paying attention to the issues. I mean, there's talk about fraud in Minnesota, for instance, daycare fraud, welfare fraud, and all that. And a lot of people are talking about the problem itself. Okay, we need to do something. I've barely seen anybody talking about how do we prevent
it from happening
or solve this problem, because it is actually solvable. It is a state. You don't even need to solve this at the federal scale. What you need is transparency. You need accountability. You don't need fraud to go on for so long, and then you have whistleblower saying, "Oh, this is going on." It's ridiculous. I mean, everybody in the states that pays tax should be able to see that this is what.
Yeah.
So that way you can even know what is going to work and what is going to work. You can know how, if resources are being spent.
So does that mean you would put government spending, government expenditure, actually both income and expenditure on public blockchains?
Ideally, those things should be public.
Radical transparency. Yeah?
Ideally, it should. No, ideally, it should. I mean, and this thing, just look at, is a perennial waste of taxpayer resources. Have you seen the amount of money spent on this lawsuit?
Yeah.
Have you seen the amount of money and time spent on these lawsuits where they are litigating these issues, and congressional hearings, Senate hearings, lots of resources. We are talking about time spent. So, and everybody could have been saved all this time. Taxpayers, on the dime of the taxpayer, really.
Yeah.
Because if you wanted to make it, like if you're gonna have to attend the hearing, you have to pay for like the political appointee or government, or you have to foot the bills by themselves. Then you see a very radical. You see all these meetings, all these hearings, they are going to drop drastically.
But it applies anywhere that democratic structure is employed. So this, and it comes across lots of countries. The West is standard for a lot of democracies. So I see absolutely no reason. At this point, I mean, we have AI. I don't think there is a technological barrier to employing or implementing these types of technologies for transparency.
Oh yeah, I agree.
There is a
Yeah,
lack of political.
I think if we wanted to have transparent records, transparent ledgers that people can look at, even without blockchain, there are already various things people could do now. But blockchain just
make
make
it
it exponentially easier and faster because
Yeah.
because of the reconciliation point.
Yeah,
So you don't have to sit down and reconcile my ledger against your ledger. So when the record only has one source of truth, and that's what a blockchain gives you. And I think I see your point in terms of public spending.
Public spending, yeah.
Even if you look at charitable spending, so charity organizations, honestly, they should have a transparent approach.
Yeah, I mean,
The income you took in and how you
This is
spend
how
it,
you
all
spend
the
it,
projects you spend it on, because you've heard about charitable organizations where most of the money is spent on very expensive flights and hotels for the workers.
Yeah.
So the business of conducting the charitable activities is the thing that costs the money rather than the end user. So yeah, I think blockchains can definitely help both public sector and private sector in terms of having a transparent system that greatly reduces fraud and it increases trust in a way. But in fact, it negates the need for trust.
Yeah,
it becomes a trustless kind of system.
Yeah.
But are there limitations to that though? I mean, can we have? So, for example, when it comes to things like health records or financial records,
to
to what extent do people want effectively their bank account? Because your crypto wallets can effectively be a bank account. To what extent they want that to be a transparent thing in terms of when payments are made? Because currently, if you know somebody's crypto address, their public address, you can see all of their transactions. You might not know which person, which organization, which name applies to each address, but to the extent that you do, you can basically trace their transactions online. And I suppose if you're not a public organization, you're not a government organization, you're not a charitable organization, you say a private person, or even a private business, the extent to which people want this to be transparent. I guess there might be good reasons why they should not be transparent. But I think I don't think that means that blockchain cannot be used, because even within the blockchain system, there are ways of protecting privacy to an extent. Some people might argue that if you provide privacy too much, maybe you're losing some of the benefits of a transparent system. But yeah,
I mean, I see it's it's in two ways. You can start with front-facing government to people, the social contract, right?
Yeah.
The moment there is accountability, people are going to be forced to give just not malicious, because there is no rule. People respect systems.
but it's also good for efficiency. Just having an efficient system. So in many countries, different government departments, the IT systems don't necessarily talk to each other. So you have education records, so all your school records on one side, health records. Even within the health system, sometimes health records are broken down between different parts. So there are there are tax records, So there are so many things that you want there to be on a general ledger that approved people can access. So not necessarily public permissionless ledgers, maybe permission ledgers where people that are allowed to access can access the data. And also, importantly, actually, they said about zero knowledge proofs. I love the idea of zero knowledge proof. I wrote a piece on that as well. I love the idea of zero knowledge proofs, because I like the idea of verification without revealing the information. So if I want to do something and you need to be 18 years old, 21 years old, 25 years old to do it, I should be able to prove that to a third party, prove that I'm over 21 without revealing the day I was born. Because the date of my date of birth is a sensitive piece of information, because we use it to authenticate ourselves in many different areas. So, and fraudsters can also use that. They can open bank accounts in your name. They can do different things in your name. So, to be able to prove it, verify, but not reveal anything, I think it's very important. That's one. Number two, I look at the project. So I did a blockchain course at MIT a few years back. And one of my final essay focused on the idea of being able to verify, say, your past work experience without repeating it every time you move jobs. So today, currently, if you move from employer A to employer B, employer B wants to search your educational background, wants to contact your university, contact your past employers, confirm that you did the job. Then you move to employer C. Employer C goes to check with B, but also goes to check with A. And B. So once you've been in the employment space for a while, you've got, I don't know, 5 employers, 10 employers. The 11th employer has to go back and speak to the 10 previous ones one by one.
One eternity later.
At the end of the day, technologies that survive and become mass adopted, mass
utilize that skill across the world, like regardless of jurisdiction. Are technologies that just make people's lives better, make their lives easier, save them time, save them. So, blockchain, crypto, is graduating into that regime. And this year is a new year. The products and services that will survive and thrive have to be able to offer value. It's as simple as that. I mean, everything now is you have to offer some value.
Regardless of what it has to be solving a problem for.
I mean, I would say fully agree. But even before you offer value, crypto has to do one thing: make it easy to use.
Make it easy.
I mean, crypto has got to be easy to use. You can't expect it to be people who are going to commit. The level of commitment, for example, to use dApps currently, level of commitment, you be bridging your coin between this platform and that platform, wrapping it in this coin, wrapping it. Like you can't, people are not going to do that. It's too much risk. And then at every stage of that process, you're telling them you might lose your coin if you don't back up your phrase. So people can't survive on that. So people are now used to very easy apps. So the decentralized applications, the dApps in the blockchain ecosystem, have to be as easy as a minimum as a standard easy app that people have on their phones. So the way we access this ecosystem must become simple. It's very difficult now. Like DeFi. How many people can use DeFi?
A lot of people don't actually.
I mean, but how many people can use it? Because
even
it takes too much effort.
Yeah, native crypto. In fact, most native crypto, so like a large population of crypto enthusiasts, what they do is they get in, ramp into stable coins, buy tokens that are, trade them for stables if they need to. If maybe there's a market pullback, then you buy again. Do leverage trading.
So they're not really doing like
they're not
core DeFi products borrowing, lending, saving money, getting interest. So
providing doing liquidity.
So I think for 2026, I have to say what is in fact we know the regulatory stuff is going on in the background. Lots of countries, the United Kingdom, United States, lots of countries are writing their full rules now. So fine. But in terms of on the part of the builders, apart from compliance, apart from ensuring that you're ready for that, because financial regulation is my area. I've been in the area for more than 20 years. It's not an easy thing for those that are not used to it. But aside from that, I think it's like you said, building useful products that solve real problems. Either you save people money, you save them time, or you save them effort. You've got to do one of those three. But the usability of crypto is absolutely important. Like how easy it is to use your platform. You must have a very simple mobile app that people can use. It's intuitive. Because you've got to translate the complexity, internalize it, and then make it easy for you. I guess it's similar to how the internet kind of was in the beginning. If you go back 25 years, where Netscape became the first widely used internet explorer that allowed ordinary people to use normal language, normal words to access the internet. So seed phrasing, it's very difficult. Even crypto wallet addresses, this is very clunky. I mean, I use crypto wallet, but it's these are long, clunky addresses. You have to keep checking. Because they look similar. So you have to get rid of that. People don't even use their username, their email address, or some
unique identifier.
Very simple, unique identifier. And I know the guys who are active on the Ethereum blockchain have been trying in this space. The Ethereum naming service, etc. But that's what crypto ecosystem has said. Ease of access, ease of securing assets. Like it needs to be easier for people to keep their assets safe. Solve real problems. One real problem is that when people die, they have crypto assets. How to ensure that their dependents or whoever they want to inherit the wealth can access their crypto. That is a real problem.
It's a real problem.
One or two companies have been trying to solve it, but not cleanly enough. So, like you said, you must solve real problems to attract people. People shouldn't even have to care whether blockchain is the underlying tech for it.
Yeah.
That's why I think 2026 builders need to solve it. Solve real problems for people, or make it easy to use blockchains.
Yeah. I mean, as much as possible, in fact, is the overarching goal for 2026. In fact, Planet's job is to make sure simplified information, easy to use, helpful information on all of these products and services are put in front of the people.
Exactly. We're working very hard, different clients to make it simple.
Yeah, make it simple.
Make blockchain simple. Because it should be simple.
It should be simple.
The technology itself, might be complex.
Every tech is.
But the front end, the usability of it should be simple. And we try to simplify the tech, simplify the use cases, simplify the businesses that are operating in this space, bring it to a wider group of people. Yeah,
including people that previously were not interested. People should be able to not even totally understand it and still be confident enough to get into it.
Exactly.